Let me just give a very quick introduction for those who don't know. Michael built from scratch what became the largest talent agency in Hollywood, Creative Arts Agency, and in the process, completely flipped the existing business model that had been in place, which was studio-led and controlled, and he turned it into everything that has become kind of the talent and creator economy in that world, and worked with, beyond the who's who. So back in the day, Steven Spielberg, Paul Newman, Robert Redford, Al Pacino, Robert De Niro, everyone else. And then in this next iteration of his career, starting, 10, 15 years ago, people started applying that model to the investment world. So the most notable was Andreessen Horowitz, A16Z, created their business based on Michael's model for CAA, and he's been advising them. And then most recently has started working with Ali Hamed at Treville. And so we're gonna dive into some of that. Michael, why don't we jump in with, what do you see as the parallels between Hollywood stars and investment stars?
Well, I'm not sure that, Ted, first of all, I would not necessarily use the stars as a comparative. I think I'd use packaging as a comparative. And the concept of putting movie stars with directors, with writers, distribution and financing. And what I've discovered, which was outlined to me in 1999 by Mark Andreessen and Ben Horowitz, was that what we did in putting entertainment together is exactly the same thing as investing if you're people focused. In my entire career, I am all about the people, which in this case would be the founders. So in venture capital, 90% of my interest lies in meeting the founder. Always like to know the idea, obviously, but finding a young person who's got a great idea, putting them with financing, which would be venture capital, and then finding, helping them with a business plan, marketing, and distribution is exactly the same skill set as packaging entertainment, which I found fascinating. I never really thought about it.
There's a premise in what you said that is finding this great talent, great founder, great Hollywood talent back in the day. What have you learned about trying to assess what makes for great talent, let's say, in a founder?
It's a very good question, and I get asked it all the time. A lot of it is frame of reference. I think we all see things, we read things, we hear things, we even taste things in our food, and we kind of subconsciously weigh it, and it sits in our psyche. I think that when you see enough people, you start to put them into some context. I collect art, and people always ask me, how do you learn about art? Do you have to read a lot? And I said, reading's helpful, but the more pictures you can look at, the better, because you get context. And it's the same thing with talent. You start to meet people, and you get a very, very fast sense, which you have to have because there's time as your enemy. You get a fast sense of what they're all about, their passion, their dedication. A lot of our directors used to say they'd look in the eyes of actors and actresses to see if they danced, which I thought was an interesting metaphor. When we meet with founders, we're really interested in their passion, their commitment, and obviously what they want to do, how they would do it, where they come from. A lot of surrounding data. And by listening to all that, we get an impression of what we think of them.
How do you think about your success rate in that assessment of someone you want to spend time with, from what happens from there over the next couple of years?
Well, for my whole career, all the way back to the time I was a tour guide at Universal Studios, up till last Sunday, aside from talking to Ali every Saturday and Sunday and driving him crazy, I look at my prior 7 days calendar, and I look to see who I enjoyed, who was disappointing, who is someone I want to befriend, who is someone I can make some money with, and who are the younger people that are on that calendar. And frankly, most of the people that are on that calendar are very young, because I can't stand people my age. So I surround myself with young, talented men and women. And I think that By doing that calendar exercise, which I've done every week of my life, I then place forward what I feel I have to focus on.
And how do you go about filling your forward calendar?
How do I go about it? I put down on Monday morning, starting at 1 a.m., so I have enough room, and I put into my Outlook calendar everybody I want to contact and deal with that week. And then I send out very early in the morning, Monday, a slew of requests for meetings or responses to meetings, but I'm very anal and organized.
So historically, you famously, in your Hollywood days, would talk to, I don't know the number is like 250 people, I don't know, I want to say a day, but that's not right.
It was a day.
How in the world do you do that?
Well, we had a different setup then. This is pre-email and pre-texting, frankly. So all communication was verbal or in person. And we all had multiple assistants. I had two that handled only phone calls, one incoming, one outgoing. So I always had someone sitting in front of me that would make outgoing calls, and then someone sitting in a separate office that handled incoming calls. And the longer they worked with you, the more familiar they got with your clients, your buyers, and people that they knew you wanted to see. And you had to train them and trust them that they would put the right people through. Occasionally, you get fooled. We were looking for Bill Murray because he was starting a movie called Stripes, and the director, who was also a client, Ivan Reitman, we couldn't find him. And got a call from, a collect call from the Taj Mahal in India. And this was 5 days before the start date, and my assistant, thank God, took it. It was Bill, and from a payphone. And the only reason I knew it was him is we asked the person he was with, who had an Indian accent, thank God. And we got him to the start date in Carolina, but that's kind of the way the system works.
So going through all of these calls, all these meetings, how did you come across this guy?
So this is a real interesting situation and a giant plus for me. Frankly, it was a little bit of luck and a little bit of friendship and a little bit of always looking for young talent. And I was having lunch with one of my close friends, Eric Lane, who ran for 20 years Goldman Sachs Asset Management. Every year, Eric would give me who he thought were the best managers of the 150 hedge fund managers that they had and 50 PE managers. And we were having lunch, and he casually mentioned that he met a young guy who he thought was incredibly gifted, and he knows I like to meet young people, and he suggested a meeting. And I took a meeting, and I was impressed. But I got more impressed because for the next 3 months, he called me every single day. And when I was doing my calendar carryover, he kept making the cut. And about 3 months in, I said, I'll work with you. I'm happy to work with you on, see what we can do with the business that's a little different. He had set up he'd bootstrapped a great business over 10 years. And the more I talked to him, the more I was impressed with his both inductive and deductive analytical ability. And I loved that he had a credit background, because putting that lens over venture was, venture is like the wild, wild west. There's no regulation. You get information on businesses till the day before an IPO. It's totally legal, and especially if you grow the founder, you know the business. But having someone who has a credit background, and he's got this extraordinary skill set to kind of find the last dollar in the capital stack. So it's very helpful when we're looking at credit deals.
Ali, every day for 3 months?
Every day for 3 months.
What were you thinking?
He told me I could, and then I did. I think I shocked him.
I never told you could.
I don't think it was a real offer, and then I just took it seriously.
Yeah. I did not tell him to call me. I want to be clear about that. He blew my vacation.
Tamara's here.
My wife and I were on vacation in Italy, and every day he drove me nuts.
So as you started working together, you've been running your business for a while. What did you see that Michael brought that you just hadn't seen before in running an asset management business?
So first off, everybody should become business partners with Michael Ovitz. It's a great idea. No, I mean, there's a bunch of obvious things. I mean, the first obvious one is just the bar of what you think talent really means, I mean, just gets a lot higher. And I think everybody thinks that they hire good people and they train people and they expect a lot out of them. But the level is just sort of 10x that. And it's an ability to just, Michael mentioned building a frame of reference, go through the amount of people until you actually find that perfect person. And there's been times where we've hired people quickly. There's been times where it's taken 9 to 10 months before we found that perfect person and not having that, not compromising. The other is also just sort of what's expected of people. I remember when Michael and I started working together initially, I sent this note out to our team over the holiday, which was basically like, we have to work this holiday because there's certain things that we need to get done. And it was sort of this like, a call to action. And Michael actually kind of edited that communication, said, don't tell people to work hard, give them an absurd deadline, and the people who meet that absurd deadline, keep them, and then don't keep anyone else. And just going through, until you finally find people who can do things that sort of feel like they defy gravity consistently, the per capita has been amazing. I think related to that, when you're a young manager, like you're building an investment firm, your whole world is built around constraints. You have constraints around how much capital you can raise, you have constraints around the deal flow that you're seeing, you have constraints around the deals that you can win. And I remember like trying to explain constraints to Michael, and it didn't compute. Because this is somebody who, for his whole business career, has just been able to figure out what he wanted to do, get to the person, and convince them that that was the right thing for them and for him. And it immediately kind of lifted constraints off of the business. And I think what was useful about having constraints in the first part of my career is, you have to learn tools to deal with constraints. You have to learn flexibility, you have to learn creativity, you have to learn how to make certain compromises to get into a deal or structure a deal or build a firm a certain way or hire a person that can solve something. And then when you take that creativity and then you no longer have constraints, it's a wild experience. I mean, the one challenge is you can do anything, so you kind of run around with your head cut off. But the other is then you really kind of identify you have to spend a lot more time figuring out what are the 3 most important things we can be doing, and then actually being able to do them. I mean, it's our CFO jokes at working with Michael is kind of like having the dragons in Game of Thrones. I mean, it's a pretty insane experience.
Well, I think it's also about, Ollie, it's about goal-oriented containment and priorities. I think if you don't prioritize what your objectives are, you get lost in a sea of irrelevant initiatives, which can happen to anybody because every initiative seems to take equal weight, and it's just not the fact. Some are just, it's like athletes. I mean, Eli Manning was up here. Some athletes are just better than others, and you have to look at it that way.
As you start figuring out how to upgrade the talent, how to raise the bar in everything you're doing, it's going to change the cadence of the organization, the intensity of the organization. How did you think about calibrating where you fit into that as the leader of the business, and then how you're going to bring along the people, unless they're just self-selecting?
Yeah, I mean, part of it is trying to be the pace car, and Michael works at an incredibly high velocity, and so he sets our pace car, and then I try to reinforce that. But one of the things that's interesting about that pace car and sort of what the priorities of the organization are is, thinking about where is the organization going to be in 5 years and what is an opportunity to prioritize that will still matter 5 years from now. I mean, 5 years ago, we had maybe a few $100 million of AUM. The decisions that we made that were worth it to us were very different than the decisions that we make now that it's worth it to us. And you think about where the firm's going to be 5 years, and you ask yourself, will I still be happy that I'm working on this? And Michael mentioned, it's about how putting focus on all those options that you have. I think that's a big part of it, is making sure that the team is working on things that you still want to be doing. The other is, you're constantly battling this idea where you want to build and grow organic young talent. I mean, the best thing in the world is somebody joins the firm young, and they keep up, and they keep leveling up, and their job changes. They go from an individual contributor to a manager, from a manager to a manager of a bigger initiative. They have to learn how to do new things. And some people keep up, and some people don't. And identifying when somebody just hasn't kept up is important. Identifying when somebody can take on even more, and just giving them an overwhelming amount of work, it just creates more operating leverage in the firm. That mixed with, sometimes you really do need to bring in, a senior lateral hire or somebody who's done it before, and realizing that, when you want to find somebody, you just have to move heaven and earth to get them. You have to give them whatever they need, give them any role they need, but you start with who is the best in the world at what they do, and then just kind of go through in extreme lengths. And when they tell you that they're happy, first off, we never recruit somebody who's looking for a job. We're only recruiting people who are incredibly happy where they are. And so that first call, when they tell you that, no, they're happy with where they are, you just keep going. So it's also just finding people who can keep up.
I think also what we try to do, first of all, any of you that have an organization, one can't have all generals and no sergeant majors. It's not possible. But you can have the best generals, and the inertia of what they do can drag the best sergeant majors to a whole nother level for promotion. And what we try to do is create a pace that everyone gets involved in. Now, that's not a pace to run people into the ground. It's to have a straight line direction of getting from A to Z with no sidetracking and being able to accomplish that task before you take on something else. We haven't done this yet, but we will, by the summer, start initiating what we call electives. I've done that at every business I've ever had. It's exactly what we did in college. You have your main business, and then you have an elective, and that elective you have two electives. One's charitable, and one is find something new that we can build, and have gotten probably some of the best ideas I've ever executed from other people coming up with ideas for businesses. And it's extraordinary how it can focus you. And it's extraordinary how it impacts the people in the company, and that they are then feeling very much a part of what you're doing.
Michael, what have you seen from when you first started working with Ali and Treville that was different from what you knew from the outside?
Well, I've been working in the investment side of things, as you know, for quite a long time, always on my own, investing my own capital or co-investing with friends at very large institutions. What I noticed with him that really reinforced my own point of view about having confidence in my own choices and taste levels is someone who is willing to work really hard, someone who can take criticism well, someone who's not afraid to speak up. I can't stand yes people. I have managed to fire almost every person that's ever worked for me that says yes to everything I say, because I am very good at listening to somebody else's point of view against my own. And if they're right and I'm wrong, I will completely dismiss my point of view and turn 180 degrees. Because without that flexibility and fluidity, you're a terrible business person if you dogmatically stay where you are. And Ollie is very good at bringing a very different point of view to things than I do. He's got an overview with a total investing background since he's in college. I've been in different areas of business, from creative to straight numbers to business to advertising to investment banking. I've done all of that. Everyone shares the foundation I mentioned at the beginning of this, but is different in what they deliver. And he delivered something differently than I did, and I think the blend of what we're doing is very exciting. And also, when I first met him, I gave him the quick test, is I told him I thought he was the worst dresser I'd ever seen, and that you can't wear these horrible shade of brown with a blue suit. And he immediately went out with our partner, Matt Burdorf, and Matt dressed him up really well. He actually looks okay today, so.
Glad to hear it, Michael.
Yeah.
So Ali, throughout Michael's career, and we've talked about this, those 250 calls a day for a long time builds up a big Rolodex. And yet, it feels like you'd think the investment world's from the outside. I'd love to hear some examples of Michael's ability to open a door and what that's like from your perspective.
Yeah, I mean, this is an early conversation that Michael and I had. We've had like a lot of firms, your first LPs or your first investors or your first believers are often, individuals who have a family office where they made their money as professional investors. Those people are often most comfortable, backing a new manager because they can kind of see, they're not just looking at your track record, they're looking at the strategy or the nuance. And we had a lot of credibility from a lot of, kind of high-profile people who became our first investors. And Michael, in one of our first conversations, said, "You don't understand. There's a difference because those people pick up the phone, I dial." And his willingness to put his name at risk and just have conviction for me early on in my career, before it was obvious, was helpful. What I didn't realize is all of these people who then moved their calendars around or made the time. I mean, these were like impossible to get to people. Any one of them are people that you would know. They would just like make the time, and I realized that that's actually, he had done the same thing for them early in their career. And the amount of people that he's sort of bent the curve for, it's not just that you can get into the room, it's that you're given the benefit of the doubt, and they're sort of like walking in hoping something can happen. What I didn't know about those first meetings is they were all Michael testing me. So what Michael would do is he would introduce me to these people who ran investment firms, and they'd sit there and they'd just like pepper me with questions, and at the end they'd be like, they'd kind of nod, and they were just writing notes to Michael about what they thought of the conversation. There was one individual, I mean, you would know, he runs this $15 billion hedge fund, and he's sort of this prolific investor. And the conversation was crazy, because he's an equities guy primarily. And he was asking me about borrowing-based definitions. He was asking about collateral pools. He was asking about like loan covenants. And I'm sort of like, I feel like I'm like arguing with him. And at the end, he goes, "Thanks, I'm trying to hire a head of private credit, so I was just practicing on you." And I think it was actually just going through those conversations where Michael was trying to validate and verify a lot of his assumptions, and it ended up being one of the best things that ever happened to the firm because of the access it gave us of whether with platforms or getting into certain rooms.
So what happens from here? You've started working together. Maybe give it just a quick taste, Ali, of where Treville is today and where you're going to try to take it.
Yeah, I mean, today we invest out of a venture capital fund, we invest out of an asset-backed credit business, and we invest out of a capital solutions business. So, we really invest up and down the capital structure, primarily of technology companies, not always technology, but primarily. And the view was always, technology companies have not really had a very sophisticated set of tools to finance themselves. There's basically venture capital and like venture debt. And it turns out that as technology companies become more mature and they have assets and they have cash flows, they need a mature capital sort of solutions or access to capital markets. And if you're a mature company or an analog company, you have a lot of access to firms, whether it's a Blackstone or a Carlyle, who have this wide product set. But if you're trying to open a new market or you're trying to do something new or you're a technology company, it's much more limited. And the firms that you often take capital from are limited in how they can help you. And I think one of the things that Michael and I really aligned on early on is we didn't want to start with our product and then go find companies that fit our product. We were obsessed with just finding the best companies in the world and figuring out how to help them, and doing so with a differentiated opportunity. I mean, how many people at this conference are wearing like a yellow badge? Like, think about how many managers there are in the world. There's a lot of competition out there. And so when you find a good investment, it is really, one, hard to find a great investment. And then two, when you do, you just have to be able to invest in the company. And instead of trying to figure out how to force that one little product into the company somehow, it just gives us more surface area where when we find something that we really love, we have a tool to go invest. And so our job is to sort of fill out that full spectrum of the capital needs of those companies. And today, those are the handful of tools that we use.
I also think, Ted, that there's too much money today there's too much capital chasing too few good deals. So it goes back to what we talked about when you started this conversation. It's all about relationships and being able to give assistance to the people that you're investing in, even if it's a credit deal. I will add to what Ollie said, which is that when I counsel young people, which I do often, unless they're in the creative area, and even there, I think anyone who doesn't have 1, 2, 3, or 7 of their fingers in technology is making a massive mistake, because the changes just keep happening. And I saw this when standards changed in the entertainment business from videotape to DVDs, and you had music going from vinyl to all different kinds of tape, and then it just kept graduating to it going through the ether. Change is the key to everything, and if you're not I don't care what age you are, if you're not in touch with technology, even if you're in credit, if you're not in touch with it, it's a giant mistake.
Michael, how do you think about the impact of AI? Maybe start on entertainment.
Well, that's a lot longer question to answer, but it's going to have a huge impact, but not instantaneously. It's going to take time. Right now, it doesn't have any soul to it, but when they start adding emotional input, if I look back to the video game industry with Pac-Man at the beginning, and now you watch Call of Duty and it's full motion video, and the faces are real and the people have emotion. It's going to get there. It's just going to, that didn't happen in a month. This is going to take time. It's going to be crazy accelerated though, because of how everything is done right now. Someone I respect greatly named Max Levchin, who founded a firm and co-founded PayPal, told me that every time he takes a week away from the office, he said, 1 day is 7 days missed in technology. So you can do the math.
As you think about the next couple of years working with Ali, what does success mean for you?
You know, I don't think I can answer that question. My goal here, because of the disparity in our chronological figures, is to set up a business that's successful and have a group of people that have something that's actually institutionalized over the years. It's the third time I've started, fourth business I've started, and I want it to be successful. I want him to be successful. We are trying to build something in record time because that's the time we live in, is accelerated moments.
Great. Michael, Ali, thank you.
Thank you.